Welcome back to the channel. In today's video, I am going to do a portfolio update with specificity post-election, just really discussing in these two particular accounts just how much my portfolio has increased just in the past few days due to what one might call the Donald Trump rally, a post-election rally. So let's just reduce the screen slightly there. So you can see 405, pretty much flat for today. And then if I scroll down here, you can see November 4th, the day before the election, I was 368,792. So 368,792. So if you take that, 405, 451, 368,792. So that's 36,000 just in Composer, which is phenomenal. And it's not surprising that, and you'll see the Composer gains are higher than the Schwab gains, even though I have more capital in Schwab. And why is that? Because in Schwab, it's kind of what I would call like a vanilla account. I'm holding individual stocks. I'm holding index funds. There really is little to no leverage ETFs within the Schwab, whereas Composer is primarily almost all leverage ETFs. So that's why when you use leverage now in a market sell-off, and if I'm in the wrong position, specifically in Composer, then the Composer would go down at a much higher rate. So the Composer is going to have much more volatility in general. Hopefully, it's going to be upside volatility, which is the difference, for example, in the Sortino versus Sharpe ratio. Sortino ratio is not going to penalize you for upside volatility, whereas the Sharpe does, which is why many people prefer a Sortino. So that's that. Let's just switch over here to to Schwab. You can see year to date, this is phenomenal. Six figures year to date, 134,000. I mean, that's a job, that's a salary. I mean, the key to getting rich is not to harvest, right? Is to continually compound, to quote, the esteemed Charlie Munger, never interrupt compounding unnecessarily. And so, but if need be, I could harvest off, six-figure salary if you want to use that. So we're at 659 here. If you go, let's go to the 1 month. And I did this math before I turned the camera on, but I just want to kind of go through it a little bit here. So 634. So if you see here, let's do 659, 307 minus 634, 054. So that's 25,253 plus the 36,659. So it's about 61.9, basically $62,000. $62,000 in 3 days. Really, it's 2 days because today I'm actually down, so it actually took away from it a little bit. And then here, I mean, it's basically in Composer, it's basically a flat day. So really $62,000 in 2 days. Pretty impressive there. And and again, I always say that it can go the other way. If there's a big market sell-off, I don't think if Kamala were elected, I don't think that the market would have sold off with the ferocity that it's gone up. I just think, personally, I think the reason that it's gone up is I feel that many people feel the market, the collective market feel that Trump is more pro-business, deregulation, lower taxes, more favorable to M&A, whereas a lot of the, Elizabeth Warren, Bernie Sanders types, antitrust. So I think it's going to be a lot of favorable to M&A, which is going to lead to more IPOs and so on and so forth. So I just think that overall people, and also I forgot probably the most important thing is pro-energy, which is going to bring down inflation across a lot of sectors, specifically probably the food inflation, the soonest from that. So that's just my own 2 cents, if you will, as to why the market reacted like this. I didn't think personally it would react to this sort of violent degree upside, which is beautiful for me. Again, $60,000 in 2 days. I could sell that, and that's a down payment on a mid-level house. It's a car, so on and so forth. So very happy about that. And we'll just scroll down here to Composer. Now, Composer, what's interesting is Composer recently announced that they crossed 130 million AUM. They did a big announcement when they crossed 100 million a while back, and then just I want to say maybe 2-3 weeks ago they did that announcement at 130. I wouldn't be surprised in the last 2 or 3 days if they're flirting with or surpassed 150 million. So it's just really cool to see Composer itself, software. I was one of the first 10 users, and to see it just explode like this and really capture a lot of attention and a lot of AUM, and a lot of different people are using it. So you can see here, you have Wishcasters. That's doubled this year. This one is doubled. This one's nearly doubled. You can see I run a lot of Manhattan Project beta ballers, as well as TQQQ for the long term, then there's various permutations. I'm one that, you can see here I have 117 symphonies. Garen Phillips, another noted YouTuber who uses Composer, also runs, I believe, over 100 symphonies. The counterpoint to that is there's people who run 5, 10, 15 more concentrated, just a couple symphonies, and maybe some permutations of them. But I like to run this many personally. And so you can see, like, this is one of the TQQQ for the long-term permutations, done quite well. And you can see, let's see if we go to holdings. Was released fairly new by Composer here. So you can see right now, these are my holdings: TQQQ 106,000, SOXL. This is from a lot of the beta ballers, I believe, right now, holding SOXL 47, and some is in cash. Financials, that's done great today. TMF, US dollar index, some more cash. BIL, a little bit of UPRO, IYK, TECL. That's like a proxy for TQQQ essentially. And then you can see I'm holding a lot of SOXL, and there's some that are hedging here slightly, some gold. So anyways, it's a nice addition, that if you're running a lot of different symphonies, but you're no longer flying blind in Composer, so to speak, in that you really can just toggle over here and see what your aggregate positions are. So if we go back to here, you can see this, and then you can just click here, Wishcasters, and you can see this is in FAS, which is that leveraged financials, and that's up 2.5% today. And so if you go down here to the beta ballers, looks like SOXL switched here. Looks like it was up earlier in the day, but right now down a little bit. Now, remember, there's a 15-minute delay on this too. So what you're seeing now, I'm filming this right now, it's like 1:42. This is from 15 minutes ago or so around 1:30-ish. So that's that. And let's head over here. Let's head back to the Schwab. And just want to show some stuff here. Now, for those of you who follow this channel, you know that I'm turning the Schwab kind of into an income-based portfolio. Schwab has a cool little feature here to show investment income. So you can see here the 2024, the monthly average is 2483. My first short-term goal is to get that to 3,000. You can see last month, for example, I hit it over 3,200, so that's excellent. Then 39 in September, and 45 in August, and see here I missed it in July, 28. This month I'm also looks like going to miss it. It's going to be probably 2,400 or so, 2,300, 2,400, somewhere in there. Approximately. Now in December, the end of the year, a lot of companies throw off dividends sometimes there, so you can see it's looking pretty good. But moving forward, now that's 2024, but if you look at the next 12 months, you can see my projected average based on holdings is over 3,000, 3114. So again, first short-term goal is everything is over is 3,000 a month. Here I'm hitting it. Here I'm not, but there's the months that are higher are compensating. But then my goal after hitting that 36,000 is essentially to ensure that there's never a single month that's under 3,000. So that would be in the next short-term goal. So you see these 2 months under, under. So you have 1, 2, 3, 4, 5, 6. So next year, the next 12 months, 6 of the 12 are above the 3,000 threshold, and 6 are below that. So I want to get it. I want to push it to over 3,000. Again, the secret to getting rich is to continually plow these dividends back into assets. If the moment you start living tremendously on capital is the moment you start cannibalizing your wealth. So you have to understand. So last month, for example, if we go back to 2024, to October, all of this 32.15 and 58 cents, all of went back, what's called the DRIP, dividend reinvestment. So all of that capital didn't go to consumption, which is so key, I believe, to compounding wealth. So and so that's nice seeing the income side of that. And then let's go over to portfolio performance in Schwab. So if you go back year to date, so this is from January 1st, November 7th, you can see the 136 as I mentioned, and you can compare this. I hold things in LLCs, which I actually want to mention with Composer when I'm done this here. So 25.89, slightly under the NASDAQ, slightly under S&P, kind of above the Dow. That's for this year. And then if you go back, now the max is going to go back to when it was transferred from TD Ameritrade. So you can see here 136,000. Let's do max. So this is going to go see. Oh, wow. It's exactly a year today is when it was transferred from TD Ameritrade, which is something I didn't know. So you can see I've compounded capital over 40% at 42.69%. And a lot of that isn't just the market going up. I've been selling options, and just like I mentioned with dividends, taking that money and plowing it back into the asset. Whenever I get premium, from selling puts and calls, I'm buying assets with it, and then that money is perhaps appreciating or throwing off dividends itself, and then so that's how I've really been able. And again, look, I mean, I've beaten all of these here in the last year, from the NASDAQ 42, the Dow, and the S&P, over 100, almost 200,000 even just in investment gains. So if I literally didn't get out of bed since last November, didn't have a job, didn't have a career, didn't do anything in the last year, this account alone is up basically 200,000. Now if we go back to what I wanted to mention, the LLC, Composer is releasing a beta LLC, which I'm going to be in the process of transferring my Composer account into as well, which is really powerful for those. I think especially for those who are running six-figure Composer accounts now. My guess is they'll probably roll it out to everyone in the new year. I actually have to get with CPA and get that LLC created and start the process. It's just a tedious process because I have to basically record my positions here, save all the URLs of all my symphonies, sell everything, transfer it to a checking, transfer it back into the account, redeploy. So I did it this year because I'm actually trader tax status, but it's held individually. So but you can see, let's go out like all time here. So all time is really from like January 18th to the present. Basically, that's when I transferred. Let's see here. It's not. Wait. Let's see here. Page unresponsive. Let's see here. Let's go back. Let's see. We're doing it all. Let's go back here. Maybe this one. Okay, okay. Let's see if this one does it. Let's go. Okay, this one's at all time. We had a little technical difficulty there, but we're through it. So you can see all time here. This is when I open the account. My cost basis for Composer is 290, and so if you take 405, 680 minus 290, so you see I'm over 115. So I'm over six figures in profit in both accounts, which is tremendous. Again, it's a great year. Everyone's a genius in a bull market. Makes you think of these sort of investing cliche from Warren Buffett. When the tide goes out, you'll see who's swimming naked. So let's see in a protracted bear market how a lot of these symphonies perform, and so on and so forth. I mean, it's easy, to make money right now. So, but I just wanted to show this just from the Composer account. You can see, and I hit 40 exactly, 40% exactly earlier today. You can see when I said in Schwab from November to November, it's 42%. So I just did this just to really show you, and I like to close always with these exercises, the true power of compound interest coupled with patience. And to the patience, you could add basically a distaste for conspicuous consumption, or at least a delay in conspicuous consumption, in the very least. That I watched a podcast with a blueberry billionaire from Canada, and he was talking about the difference sometimes between Canadians and Americans, and he said, well, when the Americans make 10 million, they want to show like they've made 100 million, and when Canadians make 10 million, they oftentimes want to hide it, So, but anyways, let's just jump over here, and you can see here. So the 405,000 in Composer. So this isn't both accounts, even though both of them this year did 40. It's unlikely that would happen. I would argue that the Composer has a greater chance if my algorithms continue to perform. We're doing 40. The Schwab absolutely will not do 40% a year. So I just kind of included it here. So you see 20 years, 40%, which is almost exactly what I'm at in Composer this year. And I was at 33% last year. So that's not, again, the last 2 years have been in that range. I did a variance of 10% to show you that a couple of things, the power of a few percentage points, what that does. And also the lower end of that variance, the 30%, a lot of top investors have done like 29, 27. So it's more in that range. You can see 338 million on the 40%, but look at the 50% returns. Again, you think of Jim here, you think of Jim Simmons, the Medallion Fund at 66%. So just with, I would say, a measly 400, because that's maybe the wrong word to use there, but there's oftentimes many people who have that in a 401k or so on and so forth. I mean, it's not 7, 8 figures, but through patience and compounding at higher levels, $1.3 billion. And then if even at 30%, you're at 76 million. So really cool to sort of track that. And then the last thing I'll do is just for fun, between the two, it's over 1 million. So, it's probably a million 50 if you add these two up. So let's just do that. Just at 1 million even, which is, make sure here. It's 100. I think that's 1 million there. So let's calculate that. Okay. So between the two accounts, if I did 40%, that might be if I were to do 60 in Composer or 70 in Composer and, in the 20s or whatever, and it balanced out, let's say, to 40. But you can see here that that's 836 million. It's 3.3 billion at 50%, the variance. And then the 30% on the million is 190 million. So I also want to show you, here with this, I want to do an interest rate variance of 1%, just to show you. Some people think, oh, it's only 1%, but and this might apply more to fees. If you think of a Jack Bogle, people that are paying a 1% management fee, or they're having even higher fees in a 401k over long periods, of what that does to capital. and let's just lower the, well, let's look at that. So if you see here, so that's 836 million at 4,900. So it's over $100 million in gains by just getting that extra 1%. And same with this, it's over 100 million here, the 724. But let's do this. Let's just do, because it's like, more modest, just to show you like over an investing lifetime, let's do 16%, $1 million. So 16%, let's say you have $1 million retirement account, and both people have, when one person does 17 and one person does 16 and one person does 15, you can see there's basically a $3 million difference between the 15 to 16, and 4 million, 3 and change per. But look at the difference, even if you're two, like say someone gets a 15% return versus a 17, that over 20 years is basically a $7 million difference, just 1% difference. So anyways, we'll end with that today. Definitely keep everyone apprised and portfolio updates, especially at the end of the year. And yeah, any questions, concerns, things like that, feel free to write in. Bye.